Hey friends, it's Simon with Trade and Perform Coaching, and it's an interesting day today. So this is the trade review for ES. We're going to splash a little NQ love on there just to kind of cover all the bases. I really like it when we put a plan together and we get really focused on where we are and aren't willing to take a trade, and the market rewards us for it, and we get rewarded for our patience and diligence in planning the process, executing the process, and staying with the process afterwards. So I want to cover that. So I posted the market preview, and the idea there is so many people on the internet, right? They don't process. They say, well, I called this or I called that. Well, you can really see this was our plan before market. This is what we did during, and then this is to see what we did during the market. And you'll see those two things have continuity. They match up. Right, and so you know what we did because I said what we were going to do before the market ever opened. So I don't short the top fifth of the market, right? So some of the people in the room do. I don't. I don't like it. It's harder to short at the top most days, and from a statistical standpoint, the shorts are harder. From a time frame, they're harder until we break out of the top 1/5 of the market, and then after that, I'm just fine on shorts. And what you'll look at is, so a lot of times what people will look at the end of the day and they'll go, well, wow, look how easy it was all day long. Realize this is what you started. Here, let's expand this out, right? And let's expand this out. This is what you started the day off with, right? That's 10 a.m. That's the first hour and a half of the market. Let's see, 8:30, 9:30, 10 a.m. That's the first hour and a half of the market. And we were really in a balanced market. And the first thing that I put out this morning was that I expected balance. So why did I expect balance? Well, if you look back to the overnight section, you'll see that we were in a very tight range overnight. As a matter of fact, it's the tightest range of the last 2 weeks. And therefore, I did not expect a very robust day. I think the night kind of gives us a little hint as to what we'll see in the day, and I didn't expect a very robust day. And you know what I forgot to do is I forgot to do the very important legal disclaimer. That's my lovely family, by the way, that I like to keep up on my computer screen now. So at any rate, important disclaimer and reminder for all traders and investors. The webinar is for educational purposes only and not a recommendation to buy or sell any particular financial instrument. Equities, futures, options, and currency trading have large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. Absolutely do not trade with money you can't afford to lose. I want to pause there. That puts so much pressure. I see people who can't lose money trying to trade, and they totally miss what's otherwise a pretty easy trade setup. They just try too hard. They need the outcome too badly. Be nice to yourself. Have money and know that it's risk money. The website is neither a solicitation nor an offer to buy or sell equities, futures, or options. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this channel. Past performance of any trading system or methodology is not necessarily indicative of future results. Absolutely consult your registered financial advisor and your risk trading plan before ever investing or trading any financial instrument. So we came in on the day, and the first thing that you'll note is we failed to get gap fill today. Globex high was floating somewhere up here. This was the opening print right here, and we never made it back above the opening print. We gapped down. So the first thing that you have to go through is a morning checklist. We had a narrow range. We had a small gap down. And you would think on small gap downs, so the first thing you have to kind of process is a small gap down. You'd think, well, that'd be relatively easy to close up. Yet we couldn't, right? Which puts sellers in control. Our first target, you'll notice this, I noted in the notes when I posted these charts last night for today, support but weak. And what I was saying in the room in the preview, which again you can see, was that in a strong market, weak support will hold, but it's not a location I like to trade from. But I have to know that it's there so I can make my appropriate plans. And you'll see it actually held quite well, both underneath. Look through the course of the day as we bring it in, even once we broke down. Because you have to remember the key location for today for buyers and sellers was the white zone, which was 2446 to 2048.50, right? And Globex low landed up, Globex high landed up here somewhere. This was Globex low. And so we knew that sellers were in control. We knew that we didn't have gap fill. We knew that we opened up with a pseudo open drive lower, but we were closer to balance at this point than we were opening lower. So the goal was, from the get-go, to get a trade out of this 24.40.50, and we try to do that the first time we try to get in. So this is important about patience in trading. We were limited at 24.40.50 the first time in. We couldn't get filled. You don't go off plan when you can't get filled. If your plan and your zones that you're building, if you're not skilled enough to find the level, just kind of shrug your shoulders and go, okay. So if you look, we spent a whole bunch of time here, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50. And the other thing that I said in the market preview was, no matter what you do, because of the grindy nature, the narrow range overnight, you had to anticipate that it was going to take a long time. I think I said 30 to 45 minutes at least to get the rotation. So finally, coming in during New York lunch, which is typical in summertime, we finally get the punch in. And what we did was, instead of going 24.40.50, we backed it up to 24.40, looking for responsive buyers. A couple people in the room got 24.39. And as you can see, it punched in, punched all the way to the back of the zone. How long did it take? 5, 10, 15, 20, 25, 30, 35. So at this point, even if the market hadn't rotated back up, right, we expected the zone to hold and give a tradable counter rotation. 2, it did its job. It gave you 35 minutes to try to get a counter rotation, right? And that last, it gave you a very convenient point to move your stop to manage risk, right? And if you look, it then popped up after this small wait, and it popped right into resistance at 42, 42.50. So no matter where you took it, whether you took it at 40.50 or you took it all the way at the back at 38.50, depending on where you took it, you had anywhere from about 5 points to 2 points, depending on where you were, right? Now, the next place we wanted to take a trade was in this 24.36.50 to 24.34, with concentration between the open gap and the naked volume point of control. So notice when it pushes back. Now, I had a conflict in trade plan, and I want to discuss that real quick. My trade plan calls for me to skip the last hour of the trading day. Really, that's a very frustrating part of the plan when we're in summertime and it pushes all the way back. But when you look at that as the net of the whole, there's 2 things there. First of all, that saves me from getting swept in a lot of end-of-day craziness, and so I respect it. But the other thing I want to see is, well, what did the market do when we really pressed to the downside? And I happened to be in a coaching session at the very end of the day when that occurred. And I want to show something here. When you look at the volume profile versus the TPO here, it's very interesting, right? So the first thing you'll notice is, look, we really pressed down hard right into the volume point of control. And this is a hard press down, right? Look at this roll from 41 all the way down to 34. Tick is holding a negative 600 consistently, not awfully, but consistently, right? We're not hitting negative 800 or 1,000, but it's pretty heavy selling. Now, what was interesting about that is if you go and look at the dome, I'm going to pull this up. Okay, so look at the TPO from today. The day time frame. And the TPO tells us that we spent very little time in this 20, that's not right. Here, let's get this back over here. There we go. This TPO tells us we spent very little time in this area. We only had 2 time frames in this area. So this is the difference between looking at TPO versus volume profile, right? When you pull up the trading dome, I'm going to show it right here. Okay. Look how much, so remember, we spent very little time in this area. But look how much, so what I'm trying to demonstrate here is how much volume went off at the very low, right, versus how little time was spent in that area, right? So the volume point of control never shifted lower from a volume profile standpoint. From a TPO standpoint, we spent very little time in this area, okay? But from a volume profile standpoint, they, in a very short period of time, through the entire house with the kitchen sink at that 2434 area. You see we went off of the 1,113 contracts. A lot of contracts went off in this area really fast, and they totally absorbed it. Buyers totally absorbed it. And what that ended up resulted in was, first of all, it reaffirmed my confidence that I had that when I place a trade zone and I say, this is the location I really want, and I said early in the day, this is the location I really want, right? You get the location you really want. You see that they throw the entire house at that support level and they can't break it. And then look at the short squeeze back to the upside. Now, the downside about that was my plan to take the trade there. It hit too late in the day. But we learned a lot about the quality of that particular setup and how we can take that with confidence. Hopefully, or what would be nice is if we hit that early in the morning, because it's setups like these that give you beautiful U-turns back to the upside and cause enormous short squeezes back up. So anyway, this is a very key location. There's not much more to tell than that because we really put the trade plan together extremely well. I also want to show you NQ was really getting pounded, and I pointed out this morning when we started the day that when you looked at a bigger picture, and I'm going to pull this up for you here, okay, I said this looked very double topish on this particular formation right here, and it was into the white zone, but again on NQ, I'm not willing to short, and I had a couple of reasons why I wasn't willing to short. First of all, if we could have broken above that 91.75, I wasn't willing to take, so this is very simple. I wasn't willing to take the stop through 91.25 first thing in the day when NQ's been showing so much strength the last couple days. I wanted to see weakness before I'm willing to jump in on the short side of NQ, and we're trapped back in. And when you look at the bigger picture on NQ, and this is what I mean by the bigger picture, I'm going to show it to you here. So I realize everyone's quite bearish on NQ. When you look at a 60-minute chart and you squeeze that chart down, look how many, so I want to show this so everyone can see it, over time. Complete U-turn, complete U-turn, complete U-turn, complete U-turn, one down day, complete U-turn. We haven't gotten the U-turn here. And as I go back on NQ, again, complete U-turn. And I'm going to keep going back and dragging this because I really want to get this point nailed home, right? So the first thing you'll notice is even with the damage in place, we haven't broke the last significant swing low that took place back in May, right? And what you'll notice is this constant pattern of U-turns. And you say, but Simon, I understand that, but we're in a bull market. Great. This is January of last year where we had this is January of this year where we had, excuse me, is that right? January 17, that's right. Again, ugly market, complete U-turn. You go back to December of 16 into January. This market looks like it's completely falling apart, complete U-turn. Again, you go back to November, right? Market falling apart, complete U-turn. And then finally, you would certainly think right here that this was the end of times for NQ, right? It was just 5 days in a row of disaster, right? Anyone who initiated a short anywhere but up here had a very hard time cashing in. Complete U-turn. The whole U-turn took from early November until just right at the end of November to get a complete U-turn out of that, right? But my point here is it doesn't really pay on NQ and ES to get overly bearish. And here's the other part, and I want to slow it down so everyone understands. You can be bearish if you're very skilled, but of all the retail clients that I coach, most people, while in theory and when they're relaxed, like the situation I'm in right now where you're very relaxed or calm, I'm not trading, I have no risk on, they're like, I would absolutely take that short and I would absolutely flip long and I would be able to read it perfectly. Trust me, the moment you add capital, risk, and leverage to a situation, your ability to think rationally and fluidly declines significantly. And that's whether you have a good meditation practice or don't, whether you're generally a calm person or if you're not a calm person, Lord help you, right? So I just want to show you can go back as far as you want. U-turns are the norm in NQ, and even when you do get what you would call meaningful declines, usually within a month they're right back up to the highs. And so I want to impress that upon you that no NQ stock has significantly missed earnings or guided lower. There haven't been any significant analyst downgrades. There's been no event, right? So there are potential events on the horizon, but they haven't actually occurred yet. And even once they do break down, you'll notice, even in this breakdown, if you wanted to short, you could wait for the counter rotation. And the other thing I want to point out is, look how vicious these counter moves back up are. They're just debilitating when you get them on the wrong side. So make sure you're shorting in a very strong location and you know exactly what you're doing. NQ overshoots its targets a lot and causes enormous pain. This right here is a great example. People who were short here, I promise you, this was all generated right here from short squeezes that got busted once we broke behind support. And it's a painful experience. So just know, being long is usually a little bit easier than being short, these two indexes in particular. And so that's really my 2 cents, 10 cents, and 3 cents about that. I don't have any more to add. It was a good day. We got paid in the room. I got paid, and so I guess there's not much to talk about. It was pretty much a boring summer day right up until the end. So you just have to be able to bide your time. So anyways, my name is Simon. I'm a Trade to Perform coaching. Anyone who'd like to come visit us for 5 days, see how you can improve your trading. I do think it's the best value in trader education that there is right now. We charge $95 per month. That's less than 2 ES points. For the ES charts, I throw in the NQ right now additionally. For the ES charts, the market preview, and the education room throughout the course of the day. And I just don't think there's a better value out there than the $95 a month I charge. And I do want to do one-on-one coaching, but I'm pretty much booked in that neighborhood right now. So anyways, I hope everyone had a wonderful day. Guys, thank you for taking the time to listen. I really appreciate it. I hope these are educational, that they help you learn to be an improved trader. Stop the boom-bust cycle and get focused on where your high odds or locations are, where you can hit them consistently, and you understand what your opponents are doing in the market so that they can pay you and you take money from them instead of donating your money to the market, which really sucks. Don't be that trader. Anyways, have a good night, guys. And again, thank y'all. I feel blessed that y'all take the time to join me in the room and listen to these videos. I know your time is valuable. Y'all have a great night, guys. I'll see you all in the morning.